Hello and welcome to Ticker Tapes. Today we're back in the world of ETFs. Equity markets sold off last week into the Juneteenth holiday weekend, but on their return, U.S. equities traded higher, with the S&P 500 rallying by 2.4% in Tuesday's trade, whilst the Nasdaq 100 added 2.5%. And as of Tuesday's close, both indices were up on a week-over-week basis. As far as ETFs were concerned, the big gainers, such as they are, were quite exotic beasts, with KEUA, the Crane Shares European Carbon Allowance ETF, rallying by 3.93%, GRN, the iPath Global Carbon ETN, up by 3.72%, and KRBN, the KFA Global Carbon ETF, up by 2.16%. Carbon emission prices have been rallying in European markets as Germany considers taking coal-fired power stations out of mothballs and back online to avoid an energy crisis this winter as supplies of Russian gas begin to tighten further. Meanwhile, U.S. natural gas prices continue to retreat, as does that of UNL, the U.S. 12-month nat gas ETF, which fell by 21.42% over the last 5 days. Energy-related ETFs accounted for most of the big fallers for the second week in a row. Looking at flow data, the rotation out of SPY, the S&P 500 index tracking ETF, continued, with $6.12 billion leaving the fund. Interestingly, $4.2 billion found its way into VTI, the Vanguard Total Market ETF, over the last week. Perhaps those flows are part of a money manager's diversification strategy, as there was also money around for VO, the Vanguard Mid-Cap ETF, which picked up $3.2 billion, whilst IWM, the iShares Russell 2000 ETF, saw inflows of $2.93 billion. Bond-oriented ETFs also saw outflows, with LQD, the iShares Investment Grade Corporate Bond ETF, losing $2.17 billion, whilst JNK, the Spider Bloomberg High Yield Bond ETF, saw $1.25 billion flow out of its coffers. At the same time, however, HYG, the iShares iBox USD High Yield Corporate Bond ETF, took in $1.35 billion, whilst SHV, the iShares Short-Term Treasury ETF, picked up an additional $1.72 billion. If nothing else, the flow data shows that there is a lot of money in search of the right home for the second half of 2022. And as we approach the end of the first half of the year, it's probably worth looking back at the fund flows seen over the year to date, or at least to the middle of June. One thing that stands out in the inflows table is that VTV, the Vanguard Value ETF, has benefited from year-to-date inflows. Value investing strategies are thought likely to outperform growth stocks in the current economic environment, and $14 billion has been wagered on that so far this year, though VTV itself is down by 10.86% during 2022. However, that performance needs to be viewed in context because VUG, the Vanguard Growth ETF, is down by 30.56% over that period. Sometimes investing for the longer term can be about losing less rather than making more.